Hey guys, what's up? Alec back with the daily stock market, and look at that. Exciting times in the stock market. Meta Platforms is down 10% to 11% after hours. They just reported earnings, so we have all the details on that. We also have Tesla stock up 12%, back over $150 per share. They reported earnings yesterday, so they're still feeling the effects of that. In this video, we're going to be going over both exciting stocks. Tesla up 12%. Meta Platforms down 11%. We're going to go over if they're a good buy at the current prices, things to be looking out for, price points, and full earnings updates on each stock. So strap your seatbelt in, slap a thumbs up on this video because you know it's going to be an absolute banger. And without further ado, let's jump right into it. Okay, so here we have the update. Meta shares sink 11% on weak revenue guidance. They did beat on their EPS. Here we can see their EPS was $4.71 per share versus the expected $4.32 per share. Revenue was $36.46 billion versus expected $36.16 billion. So again, Meta had a double beat on revenue and EPS, but why their shares plunged and why earnings is so risky to be gambling and betting on with options is because of the weak revenue guidance that Meta forecasted. Meta shares plunged in extended trading hours on Wednesday after the company issued a light forecast overshadowing better than expected first quarter results. And if we look at the last four earning results prior to the one just released, we can see that Meta Platforms was growing their EPS consistently every single quarter after quarter and beating expectations at the same time. And it seems like this most recent earnings print that we got today is finally that inflection point where Meta isn't growing their EPS any longer. We can see that the growth has stalled, but the question is, will it remain that way? Okay, so here's another article. We can see that Meta says it'll see second quarter revenue between 36.5 and 39 billion. Estimates were calling for 38.24 billion. So that's mainly the only bad news, is that the second quarter revenues will be between 36.5 and 39 billion, which really isn't bad news because they could still hit that 39 billion dollar mark and be above estimates. So the markets are a little bit overreacting in my opinion right now. We can see shares of Meta have been on a tear, climbing 116% over the last 12 months and more than 45% year to date. That's far better than the chief rival Google, which is up 45% in the last 12 months and 16% year to date. While part of Meta's stock performance has to do with a recovery in the digital advertising market, the company's stock price truly rocketed higher last quarter after the social media company announced it was initiating a 50 cents per share dividend and increased its stock buyback authorization by $50 billion. So stock buybacks are always a bullish thing for company, especially if the stock is at a low price and a fair value. Buybacks are a great thing, especially for larger companies and well-known companies with a competitive, durable advantage. Now here below, we can see Meta revenue tops expectations in Q1. Family of apps, Reality Labs. So the family of apps is bringing in 95% of that revenue. We can see Reality Labs is a very, very small percentage. But we can see Q4 2021 all the way to Q4 2023. And it's nice to see it all in one graph. So feel free to screenshot that if you want. JPM Securities analyst Doug says Meta's growth spike could face trouble in the coming months. Right now, there is growing cautions into earnings on almost certain growth declarations beyond Q1. Due to the tough comparisons and perceptions of lack of new drivers versus 2023, the analyst wrote. Despite that potential headwind, Meta has a number of strengths going its way, including its emergence as a potential early winner in the AI space, with the technology set to improve Meta's overall advertising capabilities. And if you guys didn't know, if you go to Instagram and you see that at the top on the search bar, the Meta AI, it's actually really good. It also does things Midjourney does. So if you want an AI image made, So, for example, I just typed in imagine stock market traders at lunch with a lot of food and money. And here's the image it just conjured up in a few seconds. So, if we read on and see that Meta has made a series of announcements regarding its AI efforts in the recent months, including debuting its Meta AI chatbot and Llama 3 large language model on April 18th. That's the exact chatbot that we are using. And if you look in the corner, you can even see that it says Llama 3 on that chatbot that I just displayed. The chatbot, however, has already generated a controversy after it joined a private Facebook group for mothers in Manhattan and claimed to have a child of its own. We saw the report. So a lot of controversy going on with that one. We could see the share price in green is Google on this chart, and the share price in blue is Meta Platforms. This is a year-to-date chart, and we can see that Meta is doing significantly better than Google. The bot, which is available across Facebook, Instagram, WhatsApp, Messenger, and the Meta.ai website, also can't be turned off even if the user doesn't want to use it. Despite Meta's increasing emphasis on AI, CEO Mark Zuckerberg isn't giving up on his quest to bring his vision for the metaverse to life. On Monday, he took a further step towards increasing the number of AR slash VR headsets on the market, announcing that Meta will make its Horizon operating system for headsets open source, allowing third-party companies to use it to build their own devices. Meta also stands to benefit significantly if Congress TikTok ban, which President Biden signed into law Wednesday today, survives legal challenges, okay? If the app is locked out of the US, it stands to reason that users and creators would turn to rival platforms like Instagram to scratch their social media itches. So very, very bullish for Meta, Facebook, Instagram, if we see that ban actually happening on TikTok. However, I definitely wouldn't rely on that happening, TikTok being banned, because all they have to do is sell it, and they could sell it to, whoever, someone that owns an American company and partner with that American company and still have full control. So there's going to be a loophole that TikTok is going to get through, and there's a very small chance, in my opinion, that it will actually get banned. Here we can see Meta Platforms at $493 per share, and analyst price targets on average, we can see them below, is $554 per share in the next 12 months. So around 12% upside in analyst eyes in the next 12 months. We can see a lot of five-star analysts just reiterated their price targets 2 and 3 days ago with $500 per share, $550 per share, $600 per share, another $550, a top 25 analysts with a $550 per share price target. Here we can see. So if Meta continues to fall to $450, even $400 per share, which is a very small chance that that could happen. But personally, I have price alerts set because that's when I want to buy the heaviest, is under $400 per share. And I'll start dollar cost averaging in again on Meta under $450 per share. Currently, we can see that Meta Platforms is one of my biggest winners in my portfolio, up 150%, $1,400. So overall, I don't need to be buying more Meta Platforms. I already have a large bag of Meta, $2,300 just in my one. This is one portfolio. I also have like 5 other portfolios that I own Meta stock in as well. But this is my largest portfolio. We can also see one of my other big winners is Coinbase at 247% gains, $2,500 there. And also Microsoft, SPY, Meta Platforms, Google, Amazon made a lot of money on all those stocks. So it's good to see. Right now, we can see one of my biggest losers is actually Tesla stock. We're down 37%. So right now, I'm actually dollar cost averaging into Tesla stock. I was dollar cost averaging very aggressively, anything under $150 per share. I'm still going to be dollar cost averaging under $175 per share, but I really want Tesla to dip back down under 150 so I can buy more shares of Tesla. And that is a good transition into Tesla stock. So let's talk about Tesla. We can see them up 12% from earnings. Before earnings, they were trading closer to $140 per share. In my group, we were buying those shares at $140, so we're up around 15% just on that trade, just in one day. If you took out call options, you're up even more. But Tesla, it's been pretty bad in the last 3 months. They're down 23%. Year to date, they're down 35%. So I think there's still a big buying opportunity. I think in the next 12 to 24 months, we'll see Tesla at $250 per share again, which would be around a 55% gain on a trade, even at current prices of $160 per share. If we scroll down, we can also see that the market cap is $517 billion. It's a far cry away from the $1 trillion market cap that it was at a few years ago. We can also see that the PE ratio is 33. I've been trading Tesla stock a long time, and it's very hard to find Tesla under 35 PE ratio, under 30 PE ratio. 25 PE ratio would be a steal in my opinion. So price to earning ratio 33 is implying that Tesla is in a fantastic price at $161 per share. We can also see that this headline says Tesla posted strongest session since January 2022, is a trend reversal underway. And that's an 11% gain that we actually saw, 12% gain that we saw today. So that was a huge thing going on. We can continue to see that insiders are selling shares in February, March, April. So it'll be interesting to see the rest of April and May if we see insiders starting to buy more shares. Right now in Q4 2023, we saw hedge funds actually more buying than selling, where in the last 2 quarters, we saw significantly more selling than buying. Only 3% were buying and 97% were selling in Q2 2023. Okay, and on Robinhood, if we look at what retail traders are doing, we can see that the net buys are a little bit higher in the last 2 days, really in the last week. As we scroll down, we can continue to see that the EPS did miss. Expected was 51 cents per share and came in at 45 cents per share. Okay, we can also see that their EPS has been trending in a downward projection, which is never a good thing. So here we can see a quick article why Tesla stock was soaring today, and some highlights is Tesla missed estimates on the top and bottom lines, revenue and net income in the first quarter, and the stock's still up 12%. It's because investors were persuaded by the company's vision of autonomous driving features. Remember, the AI narrative is very strong in the stock market right now. It's been going strong for the last 6 months or more, maybe even 12 months at this point. And Tesla is buying into that narrative because we can see Tesla expects its next wave of growth to be driven strongly by AI and vehicle autonomy. So they are really playing into this AI narrative right now. We can see the earnings report was a stinker and investors didn't care. Tesla shares were surging today as investors look past the weak first quarter earnings report from the leader in EVs. They were instead swayed by Elon Musk's insistence that the stock should be valued as an artificial AI and robotics company rather than an automaker or a traditional auto stock like Ford, GM, or any of those guys. Tesla also talked up its push into autonomous vehicles, AVs, and the robo-taxis on earnings call, as well as its upcoming more affordable EV that has been dubbed as the Model 2, which is very exciting. He's been talking about this for around 5 years now, and we've really gotten no word. So any word of a $20,000, $25,000 Model 2 electric vehicle Tesla will definitely spike the stock price. And that's why we were buying so heavy as a group under $150 per share. And I still think Tesla is a good deal under $175 per share. With the stock down sharply this year, the comments were enough to encourage investors to lift the beaten down stock price, which was up around 11 to 12% on Wednesday. An important thing to note is Tesla stock isn't turning the corner just yet. Revenue and profits fell in the quarter and missed estimates after the company reported a 9% decline in deliveries at the beginning of the month. On Tuesday night, it told investors that revenue fell almost 9% to $21.3 billion, missing the analyst consensus at $22.2 billion. Auto revenue was down 13%. Price margins plunged as Tesla and its competitors have cut price substantially over the last year. There's been an EV price war, and its operating margins fell from 11.4% to 5.5%. Adjusted earnings per share came in at 45 cents per share, down from 85 cents per share and below estimates of 51 cents per share. Still, Tesla said that its cost of goods sold per unit declined sequentially, excluding its Cybertruck and unscheduled downtime. The company didn't give a production forecast, but acknowledged that its vehicle volume growth rate may be lower than it was in 2023. Why investors are bidding up Tesla stock? Investors were willing to look past the weak results and instead bet on Elon Musk's visions of a self-driving future. Tesla said in its shareholder letter that it was between growth waves, with the next one expected to be driven by vehicle on autonomy and new products like the Optimus robot. The company has a robo-taxi event planned for August 8th, where the stock price will probably rise again or rise on the lead up to it. So end of summer, be ready for that. Though it's unclear when those autonomous vehicles will hit the market or when its full self-driving technology will be good enough to enable Uber-like AV ride-sharing marketplace that Musk envisions. Still, investors are confident enough in the company's future to give him the benefit of the doubt. It could take years for the self-driving story to play out, but Tesla will continue to earn a premium from investors as long as its autonomous future is credible. And also the Optimus robot, keep in mind, that's going to be all under Tesla stock, and that's not even priced in to Tesla stock at all yet. So in the future, even if it's 5-10 years from now, imagine if the Optimus robot is selling more units than the Tesla vehicles are. That's going to drastically increase the stock price over time, because that is not even priced in at all right now. So overall, Tesla is a great stock to be a cornerstone of your portfolio, in my personal opinion, not financial advice. But the main takeaway and the main thing about Tesla stock is you should have a long-term vision, and you shouldn't just be buying it to hold for like 6 or 8 months. You should really, really be buying Tesla stock, especially at these levels under 160, under 175, to be holding for like 2 years, 3 years, 5 years, even 10 years. Dollar cost averaging into Tesla under $200 per share, if you plan to hold that long, will never go wrong, in my personal opinion. And that's really just betting on Elon Musk. So there is no guarantees and anything could happen, but I personally believe in Elon Musk, and I think that Tesla stock will be closer to $250 per share in the next 12 to 24 months, and even higher than that, $350 per share, $400 per share in the next 5 years or more. So I hope you guys enjoyed that video, me taking my time out to make them for you. And if you did, smash a thumbs up on the video if you enjoyed it. Click on Success 2024 if you want to see some of the results from my private trading group. I post all my trades there: option trades, expiration dates, strike prices, ticker symbols, everything in between. We can see up 1,400% on this trade, over $3,400 made. Massive results with option trading. We also do long-term trading as well. If you want to see all my trades, message me here at the Daily Stock Market. Thank you guys for all the love and support and watching to the very end of the video. Make sure you're subscribed on YouTube if you're not already, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.